Right, let's get started. So I appreciate everybody who joined. Sorry that I started it just a few minutes early, but topic for today is Tesla's future. Short term and long term as well. Just it occurred to me, of course, if you stop and just step back away from all this discussions about the stock and what's happening with the market, Tesla is still continuing to perform, innovate like crazy, still rolling out products. In just a few months here, we've had the Cybertruck rollout to incredible fanfare, to incredible reception by customers. It's being seen publicly now. They're starting to ramp up the production in Giga Texas. You'll see that. The Model 3 Highland, also just incredible vehicle, launched in China, very successful, and now in the US as well. Also being well received by the public and the customers. That's going really well. They rolled out full self-driving version 12, and more and more people are using it. I think from currently we believe that 2% of FSD users are able to have it downloaded. And again, the kind of the recent conversations of people reacting to this and the people who are actually using it are reporting very good um, reactions to the product. It looks like that version 12 is actually solving many edge cases that version 11 couldn't do before. It seems to be much smoother, spouse approved. Things are looking really good. So there's now an announcement that Giga Mexico is going to be, the construction is going to actually start March 3rd. Very much delayed, as we know, but also doesn't really impact the business, right? Because you heard from Walter Isaacson's biography that Tesla started working on the Model 3, the Model 2 compact car way back in May of last year, and they're going to initially build it out on Giga Texas. So, they even though there was a delay in how the Mexico is building, it doesn't really in fact impact anything. But if you again stop and think about this, you have a brand new factory, the Giga Mexico, starting to be built, and this is going to be building the compact car. This is going to be doing it in mass numbers. It's a massive factory. Also, Giga, the Megapack factory in China has been launched a few months ago. That's ongoing. So just so many things are happening. Just want to ask you, Jeff, what's your thoughts about the future of Tesla? Where are we today in the near future, and what do you expect in the long-term future?
Hey, Herbert. Yeah, I mean, you forgot. I mean, one of the most important things is they settled with that Pi vendor in the Bay Area. I think that was a critical milestone for the company. It was covered by 10 different outlets in the MSM. I mean, you rattled off a number of different things that this company is in, and obviously, the biggest thing that I think they're building in the background is this AI capability. But underneath that is this hardware business that is running in the upper teens, and gross margins is probably going to get back to 20% gross margin, quite honestly, with other competitors capitulating in the space. And we heard today that Apple has capitulated as well. And I find that whole coverage quite interesting. You have a company with 160, and by the way, I have a lot of nice things to say about Apple. I'm talking about the coverage, not Apple. You have a company with $162 billion of cash, and the media narrative is, well, they're going to focus now on generative AI. Now that they don't need to be, they're going to move their focus from the car business to generative AI. Well, if you have $162 billion of cash, last time I checked, the body engineering team working on that vehicle is probably not going to be, readily transferable to an AI team. But with that said, you are seeing both future potential competitors as well as current competition as well. This is a very difficult industry that Tesla has taken on. The energy industry itself is rooted in also quite difficult to break into, and they're doing that as well. And I think they're going to enter in a way that is unique from their competition, both from their manufacturing prowess as well as now with this AI overlay. And there's very few companies that can actually put all those different things together and actually have those capabilities, and really strong capabilities as well. I don't think people understand the manufacturing and supply chain capability of Tesla it's not close to other companies. I am in this space, and I am working with many mid-size and mega cap companies, and from what I see in terms of Tesla and how supply chains are evaluated, it's not close. So I think I think the best is yet to come, to be honest with you, because they're quite frankly, they're not being recognized as an AI company yet, and they're not being recognized for their manufacturing and supply chain yet. Yet these things are actually producing real results today, whether it's the FSD performance you see in videos, or the 500,000 people that have actually bought it, the 6 million cars that are running around with inference computers inside, gathering the biggest data set in automotive, and their continued expansion in manufacturing in various realms. It really sets them up to be the dominant leader when it comes to humanoid robots. When you put all those different factors together, and their ability to build like large bodied devices, smaller bodied devices, and to be able to do them at scale, and then to have this AI capability, and now enters this last half of the decade and this focus on humanoid robots. I don't think there's a better company in the world that's set up to dominate in that space. So I'll kind of hand off. I'll kind of hand off from there. But in terms of being set up for the future, I can't. Honestly, I can't. You're going to have near-term challenges. You're going to have competitive threats. You're going to have margin threats. You're going to have, the auto business is cyclical and so forth. But if you kind of read through those waves, and you see what they're actually building in the background, I think it's never been more exciting.
Okay, thank you, Jeff. So Omar, can I ask you to do this if you'd be open to it? Give me a walk down of what you think might happen to Tesla in the next month, the next 3 months, this year, and in the future.
Well, I mean, I think a lot of things are going to happen. That's a pretty broad question.
I know. I'm just trying to get you to just say, like, I know it's a guess. Nobody knows. Of course, nobody knows. But, just guess what might happen in the next 3 months here for Tesla. I'm talking of just to clarify as well, the company, not necessarily the stock, right? I'm talking about what products you see version 12 coming out. Do you see that being wider released? Do you see that there's going to be a bot demo possibly? Do you think that there might be an announcement of a factory? I mean, anything like that, Model Y refresh.
Well, there isn't going to be a Model Y refresh this year, at least not in the United States. I think the other things could possibly happen.
Okay, let's have you, Xander. Can I ask you to give me what's your expectation what's going to happen in the next few months?
I mean, if Omar's not going to answer it, I was hoping he was going to, give me a whole 10 minutes. And
I mean, give me a
I can
real
get going on
question
my
here.
way.
What kind of question is that? What's going to happen?
Okay, well, actually, I just did a show this morning on your whole tweet thread, which I thought was fantastic. The one that you talked about how, Ron Barron kind of set this up, right? That the company continues to progress. They continue to make these things. You pointed out that the $600 billion market cap that we're at today, 3 years ago, that was the same market cap, and yet we are now at 2 million run rate of vehicles versus 400,000 back then. And then as the company continues to grow its progress, this is how eventually the stock will catch up. And I thought that was a well-written kind of analysis of what's happening. Exactly what Ron Barron predicted was going to happen, right? He said in 2020, by 4 years from now, he expects a 2 million cars, and that's exactly where we're at today. So, from now, this year, you saw FSD 12. How do you just start with that one? What's your prediction of where FSD 12 is going to roll out? How fast? How many people? And what's going to happen by the end of this year?
Well, I think the company really is executing phenomenally, and we're seeing both Tesla and the industry just move forward, honestly, at a faster pace than anyone really expected. So there's really been this big lie, as I see it, or maybe not a lie, but just an exaggeration that, oh, the world is ending, the stock is down, nobody wants EVs anymore, consumers are rejecting them, and, Elon Musk is leaving. He doesn't care about Tesla. He's going to go take his AI efforts and move it to some different company. This is sort of mostly all been entirely nonsense, really driven by, people just panicking about the stock price. But so often people see that one moment in 2020, 2021, where the market finally starts to give Tesla credit. And what they don't look at is those 6 years ahead of that, where nothing much really happened. Whereas Barron said the stock was up 20%, 10%, 30%, trading in that range for a very long time. Until suddenly people realized, hey, this isn't just a company that's going to lose money forever. This is actually a company that's turned a corner and is producing massive cash flows. So you look at Tesla as an auto business, despite some headwinds, which, you know, have really been, I think, grossly exaggerated. There's going to be some years where you grow a little faster, grow a little slower. Growing 40% instead of 80% because of a high rate environment and a competitive market with growing inventories is not the worst thing in the world. Sometimes it's going to happen. You're not just going to continue growing faster infinitely, 80%, 100%, 120%. If you really look at how they're doing, I mean, they're dominating the market. They were the number one seller of BEVs again in 2023. Many people said BYD would overtake them. They did slightly in the fourth quarter, but for the for full year again, Tesla made more BEVs than anybody else, which I think is a pretty incredible accomplishment. They had the best selling car in the world. They have the Model 3, they have the Model Y. I mean, so many people are buying the Model Y here around me because of this point of sale credit. It's amazing. And I mean, you just see the streets of LA, they're just filled with so many EVs. It's this really incredible transition, and it's a secular trend. When the market's up, when the market's down, it just keeps growing and growing every year. So it does seem like the auto industry is in a little bit of a denial about what's happening with Tesla and with the Chinese automakers. And, most companies, if they got to this position where they're at an industry leading position with EVs, whereas Jeff said, even Apple can't figure out how to do what they did. They spent 10 years trying to come up with an Apple car to compete with Tesla. This was supposed to be a self driving electric car. They couldn't figure out how to do it. They couldn't figure out how to bring it to market. And they're one of the competent players in the industry, right? So I just hope this team that's now being moved to generative AI doesn't take as long to bring that product to market as they did with the Apple car. But you've got this company that is really leading the industry. Nobody can touch them. Nobody can even really be mentioned in the same conversation as them in terms of EV volume, except for BYD. And most companies would kind of pat themselves on the back. They got the Cybertruck, it's a big success, and say, okay, we're doing great. We're dominating the vehicle industry. That's awesome. Let's give ourselves a pat on the back. We're doing everything right. But what Tesla's done here is said, all right, we're going to leverage this fleet and create a foundation model for autonomy. A machine learning model, an AI model that can look at the world with cameras and understand how to move through it. So this isn't a feature of a car. This is really one of life's oldest mysteries. Like, what are we? What is life? What is intelligence? How can we, create intelligence? So this doesn't really have to do with the car market at all. It's not a feature at all. It's really something much bigger than that. It isn't necessarily even limited to just cars when you develop that kind of intelligence. And they've been spending tons of money building things like Dojo, building their own AI inference chips. And they have a self-driving capability right now that's better than anybody else's in the world. I've used Waymo, I've used Cruise. FSD can already do things that these can't. They can go anywhere, they can take you places. The other systems just won't go. So it's been starting to roll out now. The reviews have been pretty positive. I just recorded a video with my dad. We drove 70 minutes through LA and we had no takeovers. And it did some really impressive moves that, shocked us, honestly. And I think others who've tried V12 have said the same thing. And, any other company, like I said, they'd probably just stick to the auto business. But even if they had developed this self-driving capability, most would kind of stop there and say, okay, great. We've developed this self-driving capability. This is going to be huge. But we saw that video of Optimus walking. It's walking 30% faster end to end now. And they're extending that. They want to use this intelligence to basically be able to complete any task. And you look at Figure now raising billions of dollars from Nvidia and Amazon. This isn't just some joke. This is the emergence of a new market that's going to be much bigger than the smartphone market. I think we can all agree, just thinking about it. We have one phone for $1,000. We might have several robots, and they might cost $10,000 or more. So it's easy to see how by revenue, this ends up being actually much bigger than smartphones and maybe actually much bigger than anything. I mean, we're really talking about replacing labor here with something artificial, a product you can buy. So, I mean, it's just incredibly overlooked. You look at what NVIDIA is doing with their AI training business, that's now 80%, data center revenues 80%. And Tesla has Dojo, a little startup within their company. Just one of these startups is doing what NVIDIA does. So Adam Jonas, I think, threw out a number, 500 billion, 600 billion. That's the market cap of Tesla today. I think Dojo, within 3 to 5 years, could be worth as much as Tesla's entire market cap today. So you look at every other AI name, they're all at all-time highs. And Tesla isn't. They're down 50%. So it's been really 3 years that they've been trading flat. And I'm not sure how much longer it'll take. I'm patient. But you just look at what's happening. You look at all these people who are excited about FSD beta, who are posting about getting a car for the first time that can run it and completing zero intervention drives. There's a revolution happening here in how people get around. And sooner or later, the market's going to wake up to it. And I'm really seeing with FSD 12, as it rolls out and more reviews go out, Wall Street's starting to take notice. Investors are starting to take notice. This end-to-end approach, kind of like a ChatGPT-like approach, is what takes this from being a science project that's not material to revenue because people end up canceling it to something that people actually want to subscribe to and keep. And yeah, I think it'll be material to the financials this year. It's already a $1 to $3 billion business. I think it could double or more this year.
There you go. Thank you for that. That's very much the future. I appreciate it. I do have a question about Apple. A couple people, like I think Yashu Sharma posted this out. What's the likelihood that it's in Tesla's future that, with the Unbox model, that they may actually build models for other third-party vendors and brands like an Apple? Apple decided to do this. Maybe they still have ambitions to have the significant amount of time that a person is spending on traveling. They can't just let that go. Would they partner with Tesla, and could Tesla want to do this? Is there something in their future to do this? I don't know if Omar, you want to answer it, or Jeff. Yeah, it looks like you're down.
No
Okay.
way.
So zero chance.
They're not a Magna. They're not a contract manufacturer.
Yeah.
And as a matter of fact, this is the problem that Apple had when they started trying to figure out, how do we make this Apple car? They went to Hyundai, they went to, I think, Ferrari, they went to Ford, they went to a bunch of other companies and said, hey, who wants to make this for us and white label it? We're not going to put your logo on it. We're going to slap our logo on it, but you make it for us. And most of these companies, except for, I think, Foxconn, they're like, hey, we have too much pride. We're not just going to make an Apple car and slap your logo on it. We're not a contract manufacturer. And I don't think it necessarily makes sense for Tesla to go down that route either.
Yeah, it's a very low margin business, and Tesla is actually at the top of that. Like, Tesla's a premier OEM. Like the people are dying to get to work with Tesla and to work with on anything. So, and they treat their suppliers. I mean, they treat their suppliers really fair, and that's what I'm hearing in the industry as well. And that's all you want. But yeah, contract manufacturing is a very low margin business. They're not, anybody's, you know, here, go build this for me kind of company. That's why when I hear like, oh, maybe they'll license out gigafactories. They don't need to do that. Those gigafactories are purpose built. Like they're actually a product. Like when you think of like the Model Y Jupiter, you think about those are product names, but there's actual revisions of gigafactories, and they have different output properties. They have different flows, and they have different manufacturing lines and approaches. So they're actually versioned up, and they align with products. They don't align with other people's. When you're a contract manufacturer, the way it works right now, I don't know if people are aware of it. Like if you're a contract manufacturer for Apple or one of these other big OEMs, you essentially, you have labor and you have four walls and a roof. And there's some things that's called common CapEx that you have, but most of it is unique CapEx that you buy on behalf of the OEM and bring in. And so the point is like that's not a business for Tesla. Tesla has Grohmann has an automation design team. Like if anything, Tesla is the brains behind factory design. And quite frankly, we talk about AI and humanoid bots. We talk about AI in obviously in the vehicle. I could imagine them really, I can imagine Elon being the leader, really impressing upon each of his leaders. How are you going to get AI into your procurement business? How are you going to get AI into your manufacturing line? How are you going to get AI into your hardware development side of your business so you make this work easier? You do it with less people, you become more efficient, and we can make more things concurrently.
Xander, did you have a question to the original?
Yeah.
Answer.
Did I have an answer
to the original question?
Before you didn't go back to me
Yeah.
after Omar? Yeah, I did. I had a whole thing. Totally missed what you were saying because I was going to respond, but yeah, I'm in the mountains or in the woods, so let me know if I start roboting. But I think Omar might get some hate for being too far into the future, but the reality is the way that the market perceives it. Tesla is not what Tesla actually represents and what they're working on and where they're going. So, I heard the word pet project, and I think that you said what's going to happen in the next 3 to 6 months. There is a probability that one can assign to think that they will get credit for being an AI company, and like I'm getting messages of people saying, "Oh, like what's a good price to buy?" Right? You're a technical trader. What's a good right here or and the reality is like we don't know. But if you look at down in 160 is $40, but up to 400 is $200. So like which direct? Okay, maybe it'll go to 100. Who knows, right? Or back down to 100. Who knows? But at some point, they have so many coals and irons in the fire that they're working on something that has an incredible TAM. And I think that's once the market's done with all the other players, I think Mag 7 became Mag 6. I think that becomes Mag 7 again, and Tesla gets credit for their AI abilities. And I think FSD 12 is that demo, like you said, for the robots. I think that as more videos come out, as more mind-blowing things come out, like today I saw a video of a unprotected left turn and how patient the vehicle was, and it just sat there and just found the perfect spot when the driver thought it should go, and it went. No input, no nothing. And so I think that will spread. It is slow, especially since Tesla is regarded as as the dunce of the Mag 7. So but eventually you can't fight what reality is. And the big vision statements that Omar makes regarding the company and where they're going, you know, in my opinion, I think those are all true. I don't see that these are like fake or dreams or whatever. We're seeing the reality of what they're accomplishing. So I think that the future is bright. I bought some shares today, but not financial advice.
Okay.
Let me say one thing about the Apple car. You hear all of the worst EV companies saying, hey, maybe Apple can save us. If you remember on the Lucid earnings call, they said, hey, maybe Apple want to buy Lucid. Now the Rivian investors are saying, hey, maybe Apple can buy us. Let me tell you, Apple's not going to buy anybody. Okay? This thing is dead. They wasted 10 years on this. The last thing they want to do is take Lucid or Rivian's baggage and put it on their balance sheet. So, I mean, this is really a retreat, not only for the legacy automakers, not only for the startups who are no longer growing production, but for the big tech companies too.
Yeah, I would agree. I mean, Apple doesn't have a history of doing big acquisitions nor buying big manufacturing footprints. Beats is a fully outsourced model as well, and so they have a history of doing some small resource acquisitions. They did. A lot of people don't know they acquired Power by Proxy, I think, in 2017, a wireless charging firm. A lot of the companies, a lot of OEMs, by way of acquired wireless charging design firms. And then obviously they did the Beats acquisition earlier, and they've done some smaller ones in AR/VR. But yeah, they don't have a history of Rivian's got this humongous plant in Normal, and then they want to build another one in Georgia. They don't have a history of doing that. I'm not saying it's impossible. I'm saying I agree with Omar. It's highly unlikely.
So yeah, Xander, you brought up, that at some point, the investors are going to start realizing that Tesla is an AI company, start rewarding it as an AI company. That they started rewarding it as an autonomy company. It took them a long time, but you can see that the stocks, many of them will say that part of it is FSD is part of that, but not enough, of course, as we believe. But just this weekend, Scott Walter, myself, John Gibbs, and Søren Basher, we were invited by an institutional investment firm who wanted to know more about the Tesla bot. They're interested in investing in the company, investing more in the company, and they wanted to dive deep. This is an institutional investment firm talking about the bot, which is so far away from everything else, right? It's arguably that the FSD has been around for so long that people have been watching its progress. The bot is just new thing that they started. That's, some people will say, oh, it's, years away, but actually it's not. You can now start seeing investors asking about it, talking about it, and this is how it starts, right? Slowly in the back rooms, people start talking about this, and then eventually they start diving in before everybody realizes that they need to dive in. So Sat, did you want to join in?
Yeah. Hi. Can you hear me?
Yes, you can. Go ahead.
Yeah, so one of the things that I want to add is I think the performance Model 3 refresh is going to come sometime pretty soon. They're testing it and we see shots of it. So I think that's going to happen sometime in the first half of the year. Cross my fingers at least. But I also want to emphasize the rate of innovation. Tesla, Elon said 500,000 by 2020. They basically, met that with short of like a couple hundred cars. And the critics said they can't do it. It's one of the companies that had that kind of level of production. It's one of the best in terms of arriving to that kind of production, even from when they started with the Model S. So that rate of innovation in 2020, and we're at 1.8 last year. It's something higher than that this year, right? Within like three years, basically. So I don't think Tesla is given enough credit for the rate of innovation that is happening. It's tremendously fast compared to the other companies that have a roadmap that Tesla has proven that Tesla did not have someone to follow. They pioneered a profitable EV, and they have a blueprint and they still can't even break even. So that should tell volumes of the whole situation with producing EVs profitably. And to even add to Omar's point, I was like, well, Dyson tried to actually make a EV. He's the founder spent $600 million to have one prototype. And guess what? He did exactly what everyone else did. Over-engineered it, put every tech possible, every safety feature, or everything that you could think of, and it came out to be like $250,000 car. So it's not that someone cannot make an expensive car with all the features in it. It's just that nobody could buy it. There's only a subset of people who can buy it. So if you look at the innovation that's happening with Optimus, how fast it's going, that is unprecedented. That's the way I see it, at least. Because I was looking at robotics in Japan, they take like 7 years to get that specific robot into production and to something that's actually revenue generating, and it's a specific task. It's not even like general AI, the AGI. It's none of that. So you have to see the rate of innovation that they're doing, and you have this valleys and peaks. And just like you're doing, you're going to the gym, are you going to see the progress within the first week? No, you're not going to see a progress for like 3 or 4 months before one day you wake up and it's like, hey, I do have more muscle, right? I do see progress. And that's the where we're at right now. We're in that transition. So during the transition period is actually when the growth happens, not when all the numbers come in. And even Nvidia, it took 30 years to get to 1 trillion market cap. It took 9 months for the second one. So you got to see it like the rate of innovation where it's going, and Tesla's on track for that. And trust me, when I say the compact car is going to be a whole different level in Asia and Europe, it's going to take it to a whole different level just on the vehicle side. And we're not even talking about the FSD that is going to be deployed on that.
Sad, I have a quick question for you. So you were there through the last lull in the stock price. How can you talk about like some of the psychology? You mentioned a little bit and touched on it just now, but talk about how do you maintain the conviction? Is there like, do you just watch old videos? What's your process for not losing hope?
Well, you look at the stock, then you're gonna get depressed, right? But if you look at the actual operations and what they're doing, it makes no sense, right? To me, it makes no sense from 2019, right? Even before, like the Tesla Qs could be correct, right? If you look at the financials, they weren't profitable. They're losing millions of dollars, blah blah blah. But you see the production, and they hit profitability in 2019. They've been in the green ever since, and Q over Q, year over year, they've gone up, like crazy up, right? And yet the stock is doing the exact opposite. So now it makes even less sense why they're doing that. So if you look at the operations and where it's growing, Tesla Energy went from negative 500 million to plus 500 million within 4 years. You see that trajectory. That's how you know. Like that's how I looked at it from 2010, 2011. The trajectory that it's going at, where they're accomplishing. Whereas you see Rivian and Lucid, and I like Rivian, but I look at the financials, they're going reverse right now. They're not going forward. You should have less cash burn as you go ramp up. You shouldn't have equal amount or like relatively around the same cash burn as before. So that difference you see, like Tesla's already building so many other products. If you look at and pay attention to what they're doing, and now you have to actually study way more because they're in like 5-6 different industries. So if you're researching that and understand that industry and the competitors that's already been there for a decade or how many years, and Tesla's going at it completely different or faster with a better business model, that's where I'm focusing on. So I don't focus on the stock when it's going down, this and that. Like I'm focusing on the operations, and that's how I can have the conviction, which is more education, more knowledge. And if you look at it now, there's more knowledge than ever. Like you have a bunch of people in this Tesla community, even in this chat room, that have great knowledge that break it down for you. So you could just even listen and research from talking to people in this spaces, and you'll learn so much more. And that should be the focus of it. That's why when everyone else is focusing on the stock price and this and that, they about not going up, it's like that's irrelevant. You gotta look at the business where it's going at. And the stock thing is like a side factor. So if you're looking for the stock to always go up, it's never gonna happen. It's not gonna go up all the time. And I'm perfectly fine with it because that 4 years, I have to think, oh, maybe double, triple. No, at 10x the 1 year, right? And we're going to like 5 different industries, 6 different industries. It's going to go to a whole different level. And I can't emphasize it because people in America don't drive small cars on a general basis. So they can't understand the value of the compact car that it's going to have in Europe that my friends drive the subcompact compact cars. It's going to be a whole different level just on the vehicle side. And we're not talking about energy, FSD, Optimus, none of that. And I can promise you it's going to be a whole different level. It's going to crush the other markets' vehicles that's very popular. I can promise you that even that's the first part of the next huge wave.
Hey, Warren. Yeah, Warren,
Awesome. Thank you,
welcome.
sir.
We're talking about Tesla's future, not about the stock. We're talking about, the products, the business. Where do you see it happening? I know you're big on talk about the longer term future, but do you have any thoughts on what might happen in the next 6 months, next year, and then of course 3 and longer years?
Sure, I'll start longer, and I don't know when. FSD and Robotaxi are a huge driver of future value in the company. And then Tesla Optimus is an even larger driver of value in the company. And there are some who say that that can't be valued. It's a recent post by everyone's favorite Barry Glack that you can't value it, or
Mhm.
he can't value it because Tesla's AI team doesn't report numbers on what the AI business is. So it's not a business yet. It's not a business in that sense yet. But if take my simple example for that with Robotaxi, and I could do something similar with Optimus, is imagine 10 million Tesla owned Robotaxis generating $50,000 in gross profit a year, and you got $500 billion in gross profit, and that's something like 25x last year's profit. So that's a fairly simple one to model. You can model Optimus, you can get even bigger numbers. You can get bigger numbers from Robotaxi. You can take more conservative assumptions and get smaller numbers, but no matter how you slice it, those numbers are huge. In the shorter term, I kind of question whether there's anything significant going to happen. When they said in the earnings call that the next gen vehicle was not going to be manufactured until second half of 2025, that was a little bit deflating for me. On the other hand, when you listen to the details about what they're doing with the next gen vehicle, and it's not just a vehicle, what they're basically doing with the next gen factory, they if you look at these photos we have, and I actually was going to ask Jeff about this, you look at the photos of the factory floor and you see these robots. And if I understand correctly, the vast majority of robots on a factory floor are sort of industry standard robots that are programmed to do a task. And what I heard from, I think it was Drew, it might have been Lars, is that I think they're going to be building the robots they're going to be building the machines that build the machines from the ground up. They're completely re-engineering the factory robots. So because they have a whole different manufacturing system in mind, and that means there was this thing where they're if you go back to Cybertruck, they're bending the metal with some sort of air bender. I think it's where there was a cartoon named Airbender or something. But what does it mean if they actually redesign the robots on the factory floor and redesign the factory completely? Drew has talked in the past about half the footprint, half the cost, double the volume is the goal of the next generation factory. So if manufacturing, I think cost of goods sold currently for all Teslas is around $36,000. And so the low end of a Tesla manufacturing, is probably somewhere around $30,000 for the base Model 3, right? So doesn't that mean the manufacturing cost of the next gen vehicle is going to be $15,000, possibly for the low end vehicle? I don't think that's crazy, and I don't know that there's an easy way to get there. So Tesla's doing it the not easy way, which is let's literally re-engineer the entire factory, including the machines that make the machines, and trying to wrap your head around what that means. And when do we see that? Well, it sounds like we're not going to see a product on the road from that until 2026, or at least late 2025. Then the other thing in the earnings call was Drew mentioning that they were ahead of Cybertruck on 4680 cell production. And what are they doing with the cells? And he said, well, we're stocking up the cells for future vehicle programs. Like, well, wait. Wait. What are future vehicle programs? And the one that stands out is the van. They had the van in the Investor Day presentation, the Master Plan Part 3. There's what most people think is a van under a tarp. So is the van coming? And no one asks about it. No, I don't think anyone's asked about it in an earnings call. It was in the Investor Day presentation. Is their van coming sooner? What's the potential volume for the van? I'm going to guess the volume for the van is probably comparable to Cybertruck, maybe significantly larger, because the van is probably more marketable in other countries. So globally, where Cybertruck might be difficult to, because of its size, to sell in a lot of countries. I'm in Thailand. The standard pickup truck in Thailand is a Ford Ranger size, not a F-150 size. And Thailand is the second largest pickup truck market in the world. Same thing for Australia. The vast majority of pickup truck markets where they exist are smaller pickups. So, but a van, that's pretty much marketable globally. So does that triple or quadruple the market for van versus Cybertruck? So I think that's the one wild card that I don't see a lot of people talking about is what are future vehicle programs? I thought the next gen vehicle was going to be relying primarily on lithium iron phosphate batteries. So 4680 production is currently nickel based cells. So is that Roadster? Roadster might be coming this year, although that's not going to be a big game changer for the stock or the overall revenue for the company. Those are a few things that stand out to me, but I don't know if it's okay for me to ask Jeff what he thinks about the next gen factory, and is Tesla completely engineering new robots for the factory floor?
Yeah, no, it's fine. It's a great question. The answer is yes. They've got to take COGS probably down to the $17,000 to $18,000 range, and we can debate that plus or minus a few thousand. But when you do something like that, you can't just go in and look at the bill of material and then look at something called the non-bill of material, which is everything else around making a product. It's basically taking the bucket of parts and then getting to that final product, to the final point of distribution. You can't do that by just defeaturing. I mean, you could, but you probably make a crappy product. And so they're going to have to go in and say, all right, you've got factory floor space, you've got X, Y, and you've got Z as well, which I think Tesla is more effective than others at using the full height of the factory as well. And they do a mixture of custom and off-the-shelf robots already. When you walk through the factory floor, and they have this Grohmann engineering team. So and not to get too wonky in this conversation, but you have kind of the mating or nesting device that actually touches the product. That's usually called the fixture, or that's called a nest or something. And then you actually have the robot arm, and you have the whole assembly that's driving that. And much of that can be off the shelf, but a lot of that could be custom as well, based on the job and based on some of the weights that we're dealing with. You brought up the bending apparatus. They worked with a company called Schuler, and what they're doing is they're doing some factory inside of factory exercises where they'll look at somebody who's got some pretty good tack in the industry, and they'll say, all right, we want you to do this for us exclusively, but we want the operation brought into our four walls. And the reason is when you do that, when you're taking on risk and you're doing something that's never been done before in the industry, when you take that risk on, you want it to be as close in terms of latency from the step before and the step after as possible, because you have to start farming this stuff out and sending it all over the place. That's how you introduce time. That's how you introduce variation. That's how you introduce defects in handling and shipping. So this stainless steel, and getting it formed, first off, getting that stainless steel to the hardness it needs to get to so it doesn't rust. And so it actually is, it's to the point where it's super strong, but it's actually also formed in the factory. That's a trade-off. I bet my guess is they're probably still working through that trade-off right now to get that to velocity. And that's one of the reasons they built this year's production out with a 125K line, knowing that they're probably going to double that or more in the next year. But the way they're thinking about this, and when I've built products before that we've done stuff we've never done something before, we never release we never shoot the CapEx wad from day one, because if what you're normally going to do is you're normally going to revision and split that product up and say, all right, for the first 100,000 we build, here's what we're going with, here's a solution. But my guess is they're working with Schuler to get even better tolerances on the stainless steel, and that's going to be a version 2 machine. Then they're going to bring that machine and install it, and that's going to be the additional capex that gets them from 125 to 250. So the short answer to your question is Tesla brings in new tech. They have their own fixture and own robotics design firm. They acquired, great acquisition, very well known company in the industry, very, very well sought after, and that was a fantastic acquisition. So yes, they will do their own custom automation, and with Unboxed, you're essentially modularizing the assembly process, but what a lot of people do today is they farm those modules out and then bring them in. And what Tesla's going to do is that Tesla's going to, develop and build those modules in house and then introduce them in a way where they can do parallel assembly. So they can essentially take assembly time down and have the car split into chunks where you can actually do parallel, assembly, which is, again, a lot of stuff that's done today is serial. It's a Z-axis only assembly, and I think this is really going to open it up, and it's going to allow them to take that assembly time down. That's the first thing you try to do, is you try to take your total process time down. The next thing you try to do is you try to improve your output per given square XY, and I think Tesla is going to do that via what I just described, and also I think they're going to use more of the Z-plane as well. So this is going to be I think this is one of the reasons they're doing this in Austin. They're not starting this in China. Nothing against the China team, but I think they really want to keep this under wraps. It's really tightly coordinated with the vehicle design, and that vehicle design team is in Austin and in California, and they want to build this thing and get this thing going in the US, and then almost export a factory in a factory. And then once you get the recipe down, say, all right, go order this CapEx and go install it like crazy in Mexico, and then go install in Berlin and so forth. So yeah, I'm super stoked. They've really showed, I mean, that leak on the RFQs for the Project Redwood, that's a big tell. Because when you're in RFQ stage, that means you have a preliminary design for a component, because you can't request for quote if you can't tell them what you're building. So that means they have a preliminary design. Doesn't mean it's the final design, but it means it's preliminary, which means they could be at some point soon. This is why I predict, maybe in the first half of this year, being design locked on the compact vehicle. When you're design locked, then you release for tooling, initial production tooling, and when that comes in, now you can start building up a larger volume, not thousands, but you can start building up a larger volume of actually hard tooled samples. So pretty excited about Model 2 or Model Compact, whatever the hell you want to call it.
What was you said something about
Wow.
Z-axis. What was the Z-axis thing you said? Because I understood most of what you said, but that one went over my head.
Well, I think in general, I think they may be able to use more of the height of the factory than instead of them having them be separate operations. They may be able to. I don't know. I'm just pontificating. If they can actually use more of the actual height of the factory, or are they just going to make them separate floors and do separate operations? But actually lifting the vehicle up and bringing it down. So anyway, you're trying to minimize floor space. If you can get more done with less floor space, you take your overhead costs down dramatically, and then you can deal with those bumps in the road when demand is lumpy coming in and out. So
yeah,
I don't know. In general, just a way to think of Unboxed is parallel modularized assembly and deleted parts, deleted processes. And the real question, are they going to modularize paint? Are they going to do paint at a module level? Or are they going to paint at all? Like, these are some big questions I think that need to be answered. But I could see them leaning down a route of eliminating things like a paint shop, because they're so capital intensive and they're so variable cost intensive to the product, because they create such a defect load in a factory.
Welcome, Sawyer. Before we go to you and Herbert changes gears, I just want to point something out. Every time Jeff says something wonky, get your pad and paper out because he's going to drop so much knowledge, you're not going to be able to keep up. Jeff, that was impressive.
I'm slowly learning to become a supply chain expert, and I'm writing down all of his key terms, and maybe one day I can charge big bucks for my consulting. Never gonna happen. Sawyer, welcome to the stage. We are talking about Tesla's future, not the stock. We're talking about the product, the business. If you are bold enough, can you tell me what you're expecting might happen in 3 months, 6 months, might happen this year, and of course, in the future afterwards?
Yeah, thanks for having me, guys. I think just from a broader perspective, taking a step back, my stock portfolio remains all in on Tesla 5.5 years later because I still believe in Tesla's long-term potential, and I don't think it's been fully realized yet, and that the company has really the most exciting product pipeline of any other public company that I can think of. And Tesla has a deep bench of talent and experienced people who know how to get the job done. And when you start to question, is Tesla a good investment? Well, what's the alternative? Nvidia, Apple, Amazon, Google, etc. All great companies, but these companies are at or near all-time highs, while Tesla, remains 50% off its all-time high, mostly due to concerns around growth and margins, I think. But I'm also able to separate Elon's, increasingly more frequent political takes from what is going on at Tesla, the company. We're sort of in a waiting period right now where we're waiting for Cybertruck to ramp up. We have to wait 1.5 years until the next gen vehicle. Tesla Bot is still a ways off, although that's seeing great progress. Of course, FSD and robotaxis. But eventually, I believe these things will come to fruition. And you make money by continuously reevaluating your investment and sticking to your conviction if the company's long-term trajectory remains on track, even if there are more short-term growth concerns. And I think we're just in a waiting period right now with Tesla, the company, and Cybertruck has just started ramping up. Still got a lot of more exciting things later this year to happen. Of course, Megafactory Shanghai is still to come online in Q3, Q4 next year. I wouldn't be surprised if by the end of next year we see Tesla Bot just working on something in the Tesla factories. Nothing crazy, but just initial line things, maybe simple tasks. And hopefully Tesla's sandbagging a little bit on the production start of the next gen vehicle. I agree with Warren. It was a little bit disappointing to hear the late 2025 timeline. Perhaps that's just because Elon originally just wanted to go straight to a robotaxi or a vehicle without a steering wheel, and then maybe the executive team convinced him otherwise, so they sort of switched gears. I don't know, but still a lot of exciting things to look forward to. There's a lot of noise, I feel like, in the Tesla community lately, but I think people should really try to focus on the exciting product pipeline, that there is a deep bench of really focused executives and employees at this company working to get these exciting things to come to fruition. Simple as that.
We have a lot of bulls here. We're all been bulls. Everybody has said things that are very bullish. Be interesting to, if we can, invite some of the folks who have different opinion about what's happening. The stock is depressed. People will say, and you've heard a lot of the analysts, many of them say this, which is the stock never lies. Even Christian, one of our cyber bulls here, says that a lot. The stock doesn't lie. I'm like, what? The stock is always lying, right? I don't understand why you mean by that. But the market's telling you something. So this is the general public believes that Tesla is not worth the investment. It's going to go down. It's going to continue to go down. It's been overpriced. It's been thought of as a car company, and none of the options have come to fruition. FSD has been promised every year. It's nowhere near. Everything else is decades away before it'll come. They don't say decades, but years and years away. And there's going to be a challenge for them to continue to grow. There's no longer the 50% growth for the car. Yeah. What were you going to say, Xander?
I was just going to say
that.
Oh, sorry, Xander. Go ahead. I had a timing issue.
No. Age before beauty. Go ahead.
Whoa.
I'm confused. I'm confused.
I don't know if I should even...
Wisdom before beauty.
I don't know why I need to get ripped on just to answer a question, but I'll do it. I'm just kidding. It's a good one. No, I was just going to say, your question, I mean, you have to, I think you have to look at like the behavior of people that are market makers or run hedge funds. Look at them with NVIDIA. NVIDIA was $120 stock in November. ChatGPT comes out and NVIDIA prints in February some massive growth, stuns everyone. And then what are all the 13 Gs from all the hedge funds, all of them, they all started dumping into NVIDIA and Google in in the first quarter of the year after NVIDIA has that massive print. And then now they're all chasing the name. And that takes NVIDIA from the 200s, and then it was through the roof from there. So they're late on this stuff. If they were studying this stuff and they were ahead of it and they were listening to what NVIDIA said they were working on and what they were releasing, they probably would have been plowed into the name a couple of quarters in advance, but they weren't. So they waited for the news to hit and then they started plowing into the name. Same thing happened in 2019 when Tesla really started scaling Model 3. Within a year or so, the company went profitable, and then they all started piling in the name again. So this is the behavior of like how they are. But throughout that whole thing, there's long-term investors that are like, all right, well, they'll wait that out and then and get to the next wave. So that's just how the markets behave. And then there'll be a run, and then we'll assess the competitiveness and of the solution that Tesla comes out with, or whatever is that next growth driver, and they'll assess it, and immediately there'll be calls for competition and Tesla killers again. It's just this whole kind of like, and they're trying to do it right now with NVIDIA as well. Like, how long is this thing going to last? Or their double orders going in, and if you really understand what's like going on in the industry, you realize that they've got a multi-year lead in some of the stuff that they're doing. So you really have to you can't listen to everybody. That's the thing. Everybody has the capability to have an X account or a Twitter account and say whatever the hell they want. You really got to kind of pick and choose who and what you're listening to. But in general, to answer your question, Herbert, is like they all piled in late, and they're going to pile in late again on Tesla when it happens.
I was going to say that we saw those people pile in with the hope of FSD and Robotaxi, and perhaps correctly so, the market is saying like, hey, you didn't deliver on what you promised, so we're going to move on to.
We lost you, Xander. There you are.
Yeah. Phone call came in. Do not disturb that. So I think that they piled in late, and they rotated. So that's when you ask that question, whether what happens in the next 3 to 6 months, one of the probabilities possibilities is that there's an announcement that causes that chain reaction. So although earnings, which is something that we look at very closely, especially during this type of market, you have them start piling in, even though earnings haven't printed yet, but they sniff out that, okay, robots are coming, or FSD is getting closer to being solved, or something happens with volume, that there is a surprise. So I think that those things are should be thought about. And I thought Jeff's point regarding looking at the 13 Gs for funds flow, while not earth-shattering way to do it, I think that that's an important one, and I actually jotted it down to kind of look at where is the market going by watching those things. Good tip.
All right, let's talk Dojo. So, one of the things that came out of the earnings call, people interpreted the earnings call as Dojo's delayed. I wanted to ask the panel here what your thinking is. In order for Tesla to be seen as an AI company, one of the major components is progress with Dojo. They've announced last year, right? They expect to be the top 5 supercomputers in the world sometime by the end of this year, 2024. And then they announced that the data center in Buffalo, New York. Let's start with you, Omar, and then we'll get the others chime in as well.
Yeah, I think Pete Bannon is an incredible chip architect. I think he's going to do amazing things with Dojo. But FSD doesn't actually depend on Dojo. Whether you train on NVIDIA or train on Dojo, the math is still the same. The model is still the same. But NVIDIA has 76% margins last we checked. So if you have to build a training supercomputer and you don't have to pay that 76% margin to NVIDIA, then you can get 4 times as much compute per dollar, right? So it would be much easier to be a leader. You don't have to deal with supply constraints. You don't have to deal with NVIDIA allocating supply to you. So I think it's going to be a really important project long term. But it isn't one that today has been able to replace their NVIDIA cluster. Today, the main FSD 12 model is actually training on the NVIDIA cluster that Tesla has. So the first sign of success for Dojo will be when we hear that Tesla, Dojo is running within Tesla now and they're training some models on it. But when we hear that the actual models that are running on our car, Dojo's been started to use for things like auto labeling and other models that aren't necessarily running in the car. When you hear that Tesla's actually using them for models that run in the car, that'll be the first milestone. Then when you hear that XAI or some other company has started to use them, then you get a sense of this becoming more of a serious business. So I think it is something that could potentially be huge long term. I mean, it could really be $1 trillion business in and of itself if they become competitive. And I wouldn't doubt Pete Bannon on that front. But it's also something that may not materialize. It may be that they just can't build something that's better than NVIDIA. So it's a gamble. It's one that may or may not pan out, but it's one that makes a lot of sense to do given their focus on AI and how it'll really increase their ability to train these models cost effectively. So I'm really waiting for AI Day to get an update on how things have been going, but it's really exciting that after all these years, we finally have Dojo running and training models at Tesla Palo Alto. And I think it really kind of speaks to Elon's foresight. Long before the AI hype, long before NVIDIA was one of the largest companies in the world, he went and he said, we're going to build a training supercomputer. This is super important. And this is one of those things that I think will really surprise the market as it bears fruit, not only for Tesla and their AI projects, but potentially for XAI and other companies as well.
Go ahead, Xander.
Omar or anyone else that might know, I heard a little bit about Dojo's bottleneck or technical issue from an industry insider. Do you know specifically what is the reason like Dojo 1 is failed and why they're revising it? And do we know, is it a cooling or input output? What's the technical reason?
Well, I mean, I wouldn't say it's failing. It is up and running, it's training models. It's really geared specifically towards video training and Tesla's use cases. So it's good for video training, but it's not really as good for training LLMs, right? And the reason is because of the memory bandwidth. Training these models requires a lot more sort of memory bandwidth because you have, well, I won't get into the details, but essentially the D1 chip is not as good for training LLMs. So good for video training, the kind Tesla's doing, not so good for LLMs. So it kind of missed the mark on that front. XAI is having to use NVIDIA to train instead of Dojo. So they've said that the Dojo 2, the D2 chip, should be able to address some of these issues. But the question then really is, okay, where does NVIDIA end up by the time they have the Dojo 2? And how do they really surpass them? Back when they originally started Dojo, they said, well, NVIDIA is doing so many things. They're a gaming graphics card company. They might do special effects for the movies. They might do crypto. They might do AI. AI is just sort of like one little thing for them. So if we just focus on AI training, we could probably make a better design than NVIDIA. Well, guess what? Since then, that little AI training sliver of the business has become 80% of their business. So I wouldn't say that the Dojo team has done anything wrong, really. Um, but NVIDIA has just put out some really great products, and they just continue to put out better and better products. So that's really the challenge. It's not that, can they build a training computer? Of course they can. And Google and Microsoft and others are building their own training computers as well with their own chips. But the question is, can you really break into a market that's dominated by NVIDIA and build a sort of cloud business there?
If I could just jump in there, a lot of people came away from the earnings call saying, "Oh no, Dojo's not very good." Elon was very negative on Dojo, and what I heard was version 1.5 is coming soon, version 2 and version 3 are in the works. That sounds to me like a company that's really committed on developing this technology, not a company that's ready to, toss it all in like Apple apparently just did on Apple Car. They're going, and yeah,
They got
I
a data
just
center in Buffalo they're building. They
yeah
wouldn't be
no
building a new data center if they were ready to give up. If it
yeah,
takes
and
them
then
2, 3, 4, 5 generations, they're going to keep going on this. It's crucial to what the company is all about, which is training these AI models and building these robots.
yeah, and then just on the Nvidia's the market leader, that's fine. If the market appears to be so big that Nvidia just literally can't make enough chips to supply the market demand. And that's why the price of Nvidia chips has gone up so high. So you don't have to beat Nvidia. There's this whole idea that you have to beat Nvidia or BYD is going to beat Tesla. The market for vehicles is so large that if Tesla and Nvidia split it, I mean Tesla and BYD split the vehicle market, and BYD gets 60%. Well, Tesla gets 40% of 100 million vehicles. They're doing fine. Same thing with AI. Like the business, it's really hard to wrap your head around. Does this business continue to grow like insanely large? Like hard to comprehend how big it gets. And then there's a lot of room for a lot of companies to make AI chips and AI hardware and AI cloud services. And if I heard correctly, NVIDIA's largest margins were in their cloud services division. And Dojo is not going towards selling chips or hardware. Dojo is going straight for that juiciest part of the market. And in terms of selling those services to others, that's probably 3, 4 years down the road for Tesla's my guess. But that's a pretty good market to shoot for if you think it seems like the market is pricing in effectively unlimited growth of the market for Nvidia. And if they're pricing in unlimited growth of the market for Nvidia, then there's a lot of market space left for others who can, without defeating Nvidia, you capture 10% of that size market. It's really big.
Yeah, the supply point you made is really good. There just isn't enough supply of NVIDIA chips. Even if it's inferior, but it helps alleviate a shortage, that's a huge benefit right there.
I think just to vertically integrate chip design is just a really difficult thing to do. And, like you guys said, it doesn't make sense to compare NVIDIA to Tesla because, NVIDIA's been at this a long time where Tesla's just getting started with this. And it's just really hard to optimize it for the specific needs that they
We
want.
lost our host.
Keep going, sir.
No, that was pretty much it.
Yeah, I went through this this week, Herbert, in one of our videos. Like NVIDIA is creating platforms in multiple verticals and serving multiple verticals, whether it's automotive, it's medical, it's cloud infrastructure, and so forth. And I think they're going to stay in the platform business, robotics, right? Humanoid robot. I think they're going to stay in the platform business doing, network infrastructure and doing, inferencing amongst other things. Tesla is a product company that created silicon platforms inside of their company, silicon platform inside of their company, and now a second silicon platform. The first one was to focus on inferencing and getting NVIDIA out of that, 70+% gross margin loop, which is in now 6 million Teslas. And not so much to get NVIDIA out, but like, hey, there's a more purposeful built inference computer that we can do lower power, better performance, and we can really tailor it to the needs of the vehicle and not have to go back and, beg NVIDIA for what we want. And so they've been successful in doing that. And now that team has now moved over to Dojo and is working on the network infrastructure side as well, which is NVIDIA and soon to be probably some AMD and now some D1 maybe, and eventually maybe this D2 chip. And that's what's happening. And there's no other OEM company besides, I would say Apple obviously has their own silicon team, but it's pretty rare. I mean, Google has a silicon team too. It's basically you open your hand up and that's how many there are in the world, and that are kind of working at this caliber. But it's pretty rare. There's no other auto OEM or humanoid robot OEM, for example, that's doing this. So Tesla's definitely got an advantage. And if they can connect, the base layer silicon design, software, timing to the reliability effort for the product, to the performance, NVIDIA's got to go look, when they're working on the automotive side, they got to go look into 80 different players that, that are buying their hardware. And I don't know how they deal with requirements. I don't know how they deal with all the different priorities. Whereas Tesla, their priority is, they set the priorities internally and they connect everything, again, together, vertically integrated. They have to go back out. So in summary, you're taking that huge gross margin adder out of the loop, big cost structure improvement by doing that in-house silicon. And then you're also improving in terms of requirements and management and prioritization of what you want to make your product successful for your consumers. You have direct control over that. And I think it's really hard to put that into dollarize that. But that's what Tesla has today, and they really don't get any credit for it. And it's you're thinking you're going back to the investment thesis. There's a lot of things that Tesla has that they honestly don't get credit for. And you can say, well, how do they have this multiple, shipping automobiles? How do they have this multiple? Well, they have this multiple because they were growing at 50 to 70% per year. And there's no other auto manufacturer growing at scale at 50 to 70% per year. And so that was a big piece of the multiple. And of course, there's these promises of full self-driving, robotaxi and so forth. But I actually don't believe that the AI component is a big part of the name or the stock value at this point right now. I think it's helping, but I think it's really not getting the credit it deserves. Again, think of the assets they have, the silicon design, the software piece of it. Think of the CUDA piece of NVIDIA and what they ship to their platform partners to be able to use their inference silicon. Tesla has this. They've done it for their own vehicles. But the silicon side, hardware, software, the AI software assets that they have and what they've been able to demonstrate already, obviously both on wheels and the humanoid robot, and then the energy side. I think there's a lot here that, once these option plays start hitting, we're just kind of, steps away from one of these things, hitting. In the meantime, you just have to express patience and understand. You have to understand what you own. That's the key thing. You have to separate the business from the stock price. You have to understand what you own and what you have. And I'm not telling you to buy it. I'm not telling you to hold it. I'm not telling you to sell it. I'm just saying you need to understand what you own.
I'd like to ask Omar about Dojo, in particular, what Jeff was talking about, the engineering of Dojo. My sense of what Elon has talked about is one of the things they're going for is energy efficiency, that they want, more compute per kilowatt hour, something like that, more compute per watt hour. That if you're heading towards a future of a voltage transformer shortage and an electricity generation shortage, the AI solution that uses the least electricity for the amount of compute you get is going to be the most valuable. That's what I heard Elon say a couple of times. Omar, can you comment on like how energy efficient are NVIDIA chips? Is it something they don't need to optimize for currently? Do you think I mean, I think they're not stupid. If they see Tesla's going for that, they're going to go for it too. But what is that about? Because I don't think a lot of us understand that.
I mean, energy is money when it comes to these things, right? Energy is money. You're talking about an NVIDIA DGX H100. This is like a 70-pound metal box. You know, you need like a forklift just to put it in the rack. And these InfiniBand networking solutions, they're selling them. So they got like, I think 8 H100 chips inside the DGX H100 box or something like that. So this is like a fucking monster, right? So just imagine the power that 15,000 of these things consume. When they turned on their dojo for the first time, it like blew up the local substation in Palo Alto, and they got a call from the city like, "Hey, what the hell are you guys doing down there?" So I want you to imagine California electricity rates 30 cents a kilowatt hour, and you're literally using so much electricity you can't even, you know, fathom it. Like you're running like a small town's worth of electricity through your office. Then these things get hot. Okay, they'll literally get so hot they'll melt. So now you got to cool the whole thing, right? So you got to do liquid cooling, or you got to do AC. You got to temperature control the whole thing. All of that uses, you know, more energy, more money. So if you can, let's say, reduce the energy efficiency, the energy use by 50% by using a design like Dojo, which is much more energy efficient. You know, the Dojo tile actually has a multi-chip module with 25 SoCs on it. So 25 separate computers, all on the same silicon wafer. So you got 25 computers in essentially one chip, and they can communicate with each other with very, very fast bandwidth, which reduces the need for networking and so on and so forth. So, you know, you reduce the energy 50% or so by putting 25 computers on one wafer, or, you know, whatever other innovations they have, and you're reducing a bill that's literally millions of dollars, right? So millions of dollars of operating costs, if not tens or hundreds, and you're reducing that. So really, energy is money here. It's really a substantial part of the ongoing cost of operating these data centers.
Yeah, just to me, it seems like one of Tesla's advantages in cars is total cost of ownership. And you can apply that to total cost of ownership or operation of your AI hardware. You know, yeah, okay, your chip might be, you may have some advantages with your chip, but our chip costs a lot less over the lifetime that you're going to be using it. I think that's something there.
Yeah, so clearly, like NVIDIA is being rewarded because they're actually making real sales, right? $60,000, $80,000 per chip, and it's not just a chip, right? It's a GPU, like Omar was saying. But they're trying to become Tesla, right? They're not just a platform. They are actually, you know, selling their platform services to 12 robotic companies. They're selling it to a number of legacy OEM automakers to give them autonomy. They're getting into biology and genomics. But just this week, Dr. Jim Pham, who's one of the original people that was part of OpenAI, he was there when Elon launched that company, that organization. He's also now part of NVIDIA. He just announced this week that he's creating a new group within NVIDIA. It's going to be called Generalist Embodied Agent Research. And it's about really looking into, you know, the future is going to be autonomous, it's going to be robots, it's going to be simulated agents, and they're going to create the foundation agent that's going to be creating this, you know, capability, giving these the brains and the intelligence. He says that 2024, this is interesting, 2024, this year is the year of robotics, the year of gaming AI, and the year of simulation. And so this is a pretty ambitious, you know, effort for them to do this. They'll get there, they'll succeed. But this is my point is going back to Tesla. Tesla has the lead in real world AI. They have the lead in real application of AI. They have the lead in embodied AI with their bots. They have, you know, combined that with Grok and XAI and so forth, and they're not being seen as an AI company. It's just odd, very odd. You know, as Jeff was saying, know the company that you're invested in. This is a company that's been doing AI days for years, and then they have got into Dojo supercomputer. They've got the data warehouses that, like you said, you guys were mentioning, the energy to power it. They've got the whole system, and yet including the actual intelligence in both an embodied form, the robot, as well as the cars. I love it when Elon says that we actually have 5.5 million robots already out there. We are the largest robot company today. And it's absolutely true because the robots are actually making decisions based on what it's, you know, vision, what it's seeing. So it's just, again, shake your head, It's shocking that few investors see it this way. They still think of it traditional car company, and they can't move out of that space.
Look, I mean, NVIDIA is not Tesla's competition. They sell chips. They've done things like this. For example, they had a toolkit of software that helped people make autonomous features for their cars. Did that actually help anybody solve autonomy? No. Their interest is in selling chips and software and networking solutions to the companies that are making these robots, right? So, I mean, NVIDIA going up is not a bad thing. It doesn't mean they're a Tesla competitor. I mean, they may compete in some aspects, but they're very different businesses, right? It doesn't really mean that, okay, this takes away anything. It's actually a validation of what they've been saying for years. This explosion of AI, it is happening. It's happening now. Okay. So, I mean, I just hear so much short term thinking, and you just have to laugh at it, right? Because these same sort of short term thinkers, go look at what they were saying just 18 months ago about NVIDIA. It was doom and gloom. Oh, this business is toast. Crypto's down. So who's going to want NVIDIA? And I said, you know what? Tesla's using these graphics cards to make their autopilot. I'm going to buy some NVIDIA. Everyone says it's a disaster. I think it actually has a lot of potential. And that turned out to be right. Did I expect it to shoot up this much? Did I expect ChatGPT to happen? No. But it did, all of a sudden. Now, that value was created over years, okay? It wasn't created in a short period of time. It was created over decades with them doing things like CUDA and pushing the abilities of their chips, expanding their ability, their partnerships, all of this stuff. But they got credit for it very quickly. So you hear some of these short-term thinkers just say, oh, you're thinking too long-term. I can't model it yet. Look, by the time you can model it, by the time it shows up in the P&L, it's going to be too late at that point. You missed the opportunity to buy NVIDIA when everybody was selling it at that point, right? And then at that point, you're chasing it. And then these people, when you're just buying when everybody else is buying, and then you're selling when everybody else is selling, then you're always going to lose money. It's not going to work out for you financially. You have to think about what's going on with the business, not the stock price. People are so blinded by the stock price that they can't see that an electric car is the #1 selling car in the world. Whoever thought that would happen? I mean, I'm old enough to remember when they said, nobody will want an electric car. It's the best-selling car in the world. You look at what they've been saying about FSD, they've now got hundreds of thousands of users. They're rolling out 12. You look at what Waymo's doing, there's driverless rides all the time. This is actually a reality now. It's not just fictional. We have real products that you can use today. So you just look at anything except the stock price, and just these amazing things are happening. But people are just so caught up in what the market is doing, they really can't see that.
Oh, wow, Omar, fantastic. You've been on fire today. So I have to apologize. We need to close down this space now. It's been about an hour and a half. I've got to get going, but it's been an amazing space. We had fantastic guests. You had Warren, you had Sawyer, Omar, Sat, of course, Jeff and Xander. This is Cyberbulls. We do this once a week. So thank you guys for joining us. Appreciate all the speakers. Please follow everybody. Thanks, everybody. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.